What's going on, traders? John with Bull-Throttle Trading and Investments. Today's video is going to be more of a tutorial type of video again. So what I want to accomplish in this video would be breaking down basically how to make a plan. And when I say how to make a plan, I mean taking a position, knowing where you're going to buy, knowing where you're going to sell, knowing where to put your stop loss, and how to figure out what those three things are, as well as being able to find different opportunities on stocks and managing our risk, right? So you guys hear me talk about, manage your risk, manage your risk. So today's video is going to be how I go about managing my risk and the trades that I look for, and again, how I develop my plans. So that's my goal of this video today, is to make sure that you can identify, okay, here's an opportunity, here's what my plan is going to be, and then execute your plan. So if you guys are ready, let's jump on in. Alright, so the first example that I want to show you guys, looking at Netflix here, right? And so breaking down, where do we want to find a good buy-in point? What's a good buy point? What's a good sell point? And how do we put our stop loss in there, right? So looking at Netflix, right? So let's say the market opens, we see this nice strong push, and then we see this pullback, right? And we see this pullback come down, and we have this bounce on the middle VWAP, right? So we hit this middle VWAP and we start to build the support. We actually drop below it here, right? And we start to see like a bounce, right? So that's what this wick is indicating here. So we've identified a support level here at about $438, and we start to see this bounce, right? So once we have confirmation that we're starting to move upwards, right? The closer that we buy to this support level, the better a value that we're going to have, right? I mean, that makes sense, correct? Like, the general rule of thumb is we want to buy low and sell high. So we don't want to buy it when it's at this point, because again, if we didn't have what's in front of us, there's really no indication that it couldn't just keep going back down, right? So we wait to see this bounce. This support level has been drawn, and then we start to pick up, right? We can see we're above the EMA line, so we have an upward trend going. We start to see this bounce, right? And then we want to enter in with a small position size. Again, because the closer that we could buy from this low point, the better, right? That's more room for margin, okay? So now, all right, we take a small position size, let's say, and we buy in as this is starting to bounce back up. And let's say, all right, if we're watching this, because I'm on the 5-minute chart, if we were watching this, we bounced here, right, and we start coming up. I probably would have noticed that once we pushed above this middle VWAP line, you know what I mean? Like we're now in this upward, we broke through this resistance. I probably would have bought in around this VWAP line, right? So as we can see, I bought in at 0.2% higher than the lowest point, right? And I got my confirmation. We broke above this middle VWAP line. We're above the EMA line. We have this bullish trend coming out of pre-market, right? So we had a little pullback. And at that point, I know this is now just a pullback. It's not a reversal. It's a pullback. We bounced. We started going up, right? So now, entering in this position here, right? We can see that we started to pick up. And I like to look back to, okay, our previous resistance level was here at 441, right? So when we got to this level, it probably would have been a smart idea to ring in some of your profits, right? I mean, we could expect, all right, we had a pullback. We expect to see you know, this point get hit, right? And the reason why we expect to see that is, all right, look right here. All right, this is like a perfect example, and this is why I'm using Netflix. So we identified a support and we identified a resistance, and there could have been multiple plays made here because we went up to this resistance, down to the support, up to the resistance, down to the support, up to the resistance, down to the support, right? So that's why it makes sense to buy as close as you can to the support, right? Because if we bought at this exact support line and sold it off at the perfect resistance, that's 0.75% profit right there, right? So again, I understand that that's not a huge profit, but I'm just using this chart to show you guys, right? If you buy right here, okay, and ride it up, all right, look, now you're at 0.35%. So you've literally cut your margin in half. That's why the closer you could buy to this support level, the better. However, we want that confirmation that we've seen that bounce. That's why we tend to buy a little above, right? So if we took a position here, we bounced on this EMA line, we saw that we had this upward momentum, and let's say we bought in right about in the middle of this candlestick, right? If we buy here and we're on this uptrend, we can expect that it's going to reach this previous resistance. So when it gets close to reaching that previous resistance, this is where you want to sell, right? Or at least lock in some profit. Because when it reaches this resistance point, it could either break through and keep going up, or it could pull back, right? So this is why you want to lock in some of your profits, if not your entire position. That's up to whatever your trading style is and what works best for you. I don't want to go in and suggest one way or the other. Everybody finds their own niche, and if they're profitable doing what they do, then continue to do it, right? So this is where I want to challenge you guys to make yourself better traders, right? So I want you to pay attention that, okay, if you're going to take a position on something, before you buy in, all right, where do you want your good entry point to be? Like, basically, if it gets beyond a certain point, it's no longer worth entering, right? As we saw before, if we didn't catch this until we were like up here and we can see that our resistance level is only right here, then it's not worth it to buy. And the reason why is because, all right, your potential from this point for a gain is 0.4%. Your potential for loss is 0.4%. So you have a 50-50 shot, all right? And that is not managing your risk. So when I talk about managing your risk, this is what I mean, okay? Managing my risk means, okay, I'm going to try to buy in with a limit order as close as I can to this support. And if it goes above where my limit order is, then I do not wish to purchase the stock. Why? Because it's no longer valuable to me. It's not, based on what I expect it to do, it doesn't offer a higher reward to risk ratio, right? So if we ended up buying down here, right? Like, let's say we bought in right when this candle broke above this previous one. So let's say we bought in right here, right? All right, now our potential for gain is 0.65%, and our potential for loss is 0.15%, right? So now we could see that we have way better chance, a better ratio of reward than we do our risk. So this is how we manage our risk, right? So then we know if we take a position at this point, we know that we want to sell around this general area, around 444.35, right? When we see our stock reach that point, then we know, okay, it could continue to go up, but now it could also turn and go back down. And we want to lock in our profits as to not get caught holding something as it drops, right? I mean, I think that makes sense to us all. Now, when we take this position, we don't know that it's going to go back up to this point, right? So this is where your stop loss is important, okay? So if we buy in at this position and we want to get to this position, right? Well, we can see that we have this support level here. So let's look here. We drop down, like let's say we bought in and we didn't sell our profits here, and it starts to drop down, and now we have this higher support, right? We have these higher lows, okay? Well, then that would tell me, all right, don't sell your position yet, because you still have potential to go back up there, which boom, it did, right? So now you could lock in your profits here. And now, you've made a profit on this. The reason why I have my stop loss set at the bottom of this candle is because if we break below this point, now we have confirmation of a reversal, right? So now we're getting lower lows. And at that point, holding this stock is no longer valuable to me because it did not go according to my plan, right? So I knew that I had this potential for loss of 0.15 when I entered this position, right? So I know I'm not going to buy into this position with a size that if I lose 0.15% of, like, I have to be okay with that, right? So I know that that's my risk. My risk is losing 0.15% on this trade, and my potential for gain is 0.65%. When I see that it's trading above this support level, I do not want to sell my position yet because I haven't got confirmation of a reversal, which means that it could just as well go back up in my favor. So I'm going to wait, I'm going to be patient, and I'm going to see what it does. The second that it breaks below this candle and I start to see lower lows, that is my confirmation now of a reversal, and it is no longer worth holding my position. And you don't want to get caught on the side where you go against your plan and it starts to go down and you say, oh, well, it still might bounce up. And then you end up chasing it, you try averaging down, so you're throwing more money into a stock that is losing for you, which doesn't make sense to me, right? I think we can all agree on that. Why would you want to throw more money in a stock that is not bringing you a return? You don't want to do that. Do not get caught in that. That's why it is important to have these plans. No, okay, I'm going to buy here. And if it goes above this, then I'm not going to buy. Let's say I caught this and it was already here, right? And we hit this point and we came back down, and I saw that we started to bounce again at this point, and it was a higher low, okay? So now when I see this candlestick break above this EMA line, okay, now I'm going to buy in because now I'm buying in where I still have this good margin, right? That's why stick to your plan. Patterns tend to repeat themselves. Have a plan. When you see that it breaks below this stop loss point, right? This previous support, the stock is no good anymore. And you have to let it go. You have to let it go. And then again, if we end up getting up to this point, it may continue to go up, right? And that's, again, this is how we manage our risk. This is why I say lock in profits. It doesn't mean you have to sell your whole position size, but maybe you want to sell more of your, most of it. Like I would probably sell about 90% of my position right here, right? And I would lock in those profits. And then if I see that we start to break above this point, right? I'm going to draw a line here. So when this gets up here or close to it, I lock in my profits, right? And now let's say I have 10% of my original position size to see what it's going to do. Well, if it breaks above this, well, then this resistance now becomes a new support level, right? So if it breaks above it, we want to wait for confirmation. We want to make sure that it doesn't just peak and pull back. We want to make sure if it breaks above this resistance level and identifies it as a new support now and continues to uptrend, then I could buy back in with another 90% and continue to carry it up, right? It's breaking it down on those plans, right? So I had a plan. I'll draw another line here. I had a plan in this window of opportunity, in this window of margin. I wanted to buy close to this line, sell close to this line, right? When I break above this, then I have a new resistance that'll form, right? So when I break above this and I see, I don't have a whole lot of room, so I'll draw another line here. And let's just say, okay, now this is my new window. Okay, well now I have a new plan, right? So when it breaks above this after you've locked in profits, if it continued to go up here, okay, well now you have a new plan. And you want to buy close to this line and sell close to that line, right? And you have your stop loss set here so that, okay, if it goes now back below this, that I'm going to sell my position and not hold the stock that no longer I see value in. Okay, so this is what I mean when I talk about managing our risk and having a plan. So I want to challenge you guys before even entering a trade. Be patient. Let it show you where that support level is, where that resistance level is. Wait for those confirmations, and then again, buy close to this line, sell close to that line, and have a get out plan. Have a stop loss, right? So I know, okay, when I see this bounce on this line, I'll buy into it like right here, right? And if it goes back down below this line, I don't want it at this point. I want it below this point would be my stop loss, okay? When it goes, if it bounces on this line again, I don't want to sell my position, right? Because it could still bounce. When it goes below that line, I want out, right? So again, do your part, have a plan, wait for confirmation, and use your stop loss. Be smart. This is why a good trader doesn't gamble. They have a plan. There's gambling, you may get lucky a couple of times, but on the long haul, it does not pay out. It does not pay out. So this is why it's important to have these plans. I hope that this helped bring you guys some value at getting a better understanding of when to enter and when to exit a position, as well as where to set your stop loss. Please hit that like and subscribe button if you got value out of this. Be sure to check out our Facebook group, Bull-Throttle Trading and Investments. And I hope you guys all end it in the green, and I'll see you next time.